we have the focus that's coming in terms of domestic consumption theme for the next 2 quarters. And this is what market expert Nischal Maheshwari said on the current market situation. He added that there's no point in selling in the kind of market that we are in. Let's listen into a bite of that conversation.
Yes, it's been a turbulent morning, basically. Yes. At the moment, I think the best thing to do is just stay away from the market. There is no point on catching a falling knife because you really don't know how the other countries are going to react. China has already done it. Most countries, smaller ones, basically have all come to the table to negotiate. So let's see how all this pans out. I think it's best to avoid for next 1.5 weeks. See how all these things pan out. Maybe the Nifty will go to whatever levels. Nobody can predict that. So best to avoid. There is no hurry to buy in this market.
To buy, but then would you avoid selling as well, Nischal? Because the point is that, and here I'm talking about something like a trend. Okay, so there was a business update that perhaps was not as rosy as some would have liked, but 28% growth in the revenue for the fourth quarter. It was expected of over 35%. It's a stock that is down 17%. It's a Nifty 50 stock. Do you avoid selling as well is a question.
So it depends upon basically whether it's been selling because there has been some margin calls. If there is no margin call, I don't think so at this point. Basically, not only trend but anything. There is no point in selling in this kind of a market. The markets are very low. I think some sane sense is going to come back to this market, and maybe you will get better rates basically to sell. So there is. I totally agree with you. Basically, there is no point on actually going out and panicking and selling at these levels. Yes, you may still see lower levels than this. That's what I'm saying. I'm not sure basically how low it can go, but there is no need to panic at the moment because I'm saying, yes, conditions are bad. And but what my thought remains to be that cooler heads will come to the table and things are going to work out, not at pre-tariff levels, but definitely somewhere in between the pre-tariff and the level of tariffs which the Trump administration has put. So across the world, I see maybe there is going to be some giveaway, mostly a 10%, which was the base level of tariff, and some percentage above that. But then it is much better than what we are today. So that's why I'm saying basically just cool off and see for the next 2 weeks how this market comes, and then only whether you want to buy or sell, then only take a call.
Okay, and Mr. Maheshwari, if you wait for 2 weeks and we see a significant dip in the next 2 weeks as well, any counters that you would want to enter into and see that these counters are now looking attractive where valuations are concerned? And will those bets be domestic play bets?
Surely, I think last week itself, basically, I think it has become clear that you have to focus on the domestic companies for the at least next 2 quarters. And beyond the next 2 quarters also, I believe the Indian economy is going to revive. I think the government is taking enough measures, whether it is the rate cuts. I expect another rate cut to happen in another couple of days. Then there has been an income tax cut. So I think all those things, measures which the government is doing basically will show up in the second half of the current financial year. So that's why you are saying basically that at least for the next 2 quarters, wait out, and thereafter basically we are going to see earnings coming back. Maybe some amount of earning upgrades also happen in the second half. So better economic sense will prevail.
Nischal, if we're talking about, and your point is well made, right? Because if you're talking about announcements that the Chinese government is already making to focus on domestic growth, you'll have European leaders that are talking about, hey, don't invest in the US, questioning whether or not it makes sense and saying double down on investments in Europe. So if all of these geographies, and I take your point to say that perhaps a common ground will be found on trade, but once bitten, twice shy. If you're dealing with the US administration, you'll have a lot of administrations around the world that will double down on domestic growth. And so from that perspective, for the Indian investor, what areas do you see? For example, financials have been relatively resilient. And in order for domestic to grow, you need financials. Similarly, you would talk about cap goods, you would talk about power. What are the places that you would look at and say there is value here?
So I think financials definitely as a sector basically has got good value, and it's not performed for the last 3-4 years. So I think the outlook seems to be good for the financials. If we have another rate cut happening, which is most likely to happen, I think it is going to be favorable for the whole financial sector. So financials is one. I would, for the moment, still wait out to see whether the consumption is coming back or not, because there, I think with these kind of numbers, there are question marks. FMCG, it's a very mixed bag. There are a couple of companies saying yes, others are saying no. So really, I think one should wait out for the consumption sector. Government spending is another definite thing happening. Government spent around 12 lakh crores last year. I think similar number is happening this year also. So I think there you should be looking at company industries like cement. Steel is a global commodity, so avoid it for the moment, because you don't know if there is a tariff war between China and US. So China has to find newer markets to dump their steel. So India could be one of them. So avoid steel or metals for the moment, but cement is one basically definitely you should look at. The other ones basically capital goods to an extent. But capital good one has to be very clear, saying that it's not the companies which are exporting, because India has a large capital good export to the US also. So one should be very careful where we are investing.